happening, gang? Back live in the secret stash. Hanging out with my man Jeremy Beck, co-founder of the Greenhouse Group, and engineer Steve, always keeping it live and fresh for Staffs Nation. Appreciate you, brother. Is that a little Badco? Is that a little Badco? I don't even know what that is. Feel like making love? I don't know. That's asking too much out of me at this point in time. Gang, this is an important segment for us because just caught us, by the way, live right now in your car, hanging out in your work studio or cubicle. The last segment, we just rifled through probably the most ridiculous barrage of numbers in the history of radio, kind of painting a little picture nationally, trying to find our truth locally. But this, gang, is probably one of the most important elements right now. Like if you're thinking about buying, even if you're a seller and you want a better understanding about trying to time, your placement in the market to be able to get top dollar, this is going to be critical. So we got my man Jeremy back. He's a mortgage planner extraordinaire down at the Greenhouse Group. You can catch him, by the way, at Jeremy at greenmeansgrow.com if you have any questions for him. But Jeremy, what's changed in the last couple of weeks that's going to be critical for buyers especially?
Yeah, some really cool changes right now that we've made in our underwriting parameters or how we get people loans, right? So one of the challenges that people have are the guidelines. What do the lenders allow you to do and not do? And I'm just going to put a little context on this. One of the things that happened during the mortgage meltdown is that there were conforming loan limits of $417,000, right? Anything above that, you couldn't get a regular loan for. And so what Fannie and Freddie did is they did a little stopgap and they created these called high balance conforming limits. And so now anywhere from $417,000 to, in our county, $625,000, you can, or $562 depending on where you are, $562 in San Diego, $625 elsewhere, you can then buy in those ranges or get loan amounts in those ranges. And the challenge before was that within those ranges, in that little stopgap area, everything above 417, you had to have tighter parameters. One of the biggest ones that was stopping people is the required down payment. So just in San Diego, would you say it's uncommon to need a loan higher than $417,000 to buy a home here?
I mean, you know this better than anyone. The fact that most people have less down payment. I'd say most people that we help anyway. We're
Sure.
First time buyer experts here in town, but usually they need all the help they can get with financing. So it's very common that someone's going to trip up on that number quickly.
Well, let's think about it. If you're trying to buy a $650,000 home, with the way rates are, people can afford this. Yeah. But not a lot of people have $130,000 lying around.
Right.
So that 10% was a real kind of obstacle for a lot of people. Well, Fannie just announced that they're going to be allowing only 5% down now instead of requiring that 10% down. So we already have lenders that are implementing this, 5% down to buy with a loan amount all the way up to your county limits. Really cool.
And that's incredible too, because you think about the fact that and this is even one of the stats that we had pulled up was the income necessary for a family to buy like a medium priced home right now skyrocketed.
Yeah.
And that's not even since 2012, like literally since the beginning of the year.
How much it costs. Yep.
It's putting all that unnecessary stress. I don't know if it's unnecessary, but let's just call it the natural organic flow of everythingness is just moving in that direction, right? And there's nothing that you and I can do about it. So gratefully, they're starting to kind of pull back the noose on some of this stuff, and that's good news. It means there's confidence that people are paying back their mortgages as agreed, and the amount of money that is there to be lent out is continuing to increase. That was a stat we actually didn't share.
Yep.
The availability of mortgage money. So all of it seems to be trending in the right direction. Thankfully, they pulled back the reins a little bit and allowed us to be a little bit more accessible here in San Diego County.
Yep. And so that allows people to get into that price range, that maybe that high fives, low sixes, maybe even to the low sevens where they couldn't already get there. The next thing that is cool is that they've reduced the minimum contribution from the borrower themselves. So everybody's probably heard of gift funds, right? So if you don't have the money yourself, maybe mom and dad, maybe an uncle, they can bring in some of the down payment for you. prior to this change, you had to bring in 5% of your own money, which can be a challenge, right? Or maybe you can afford the payment because you've got a new killer job, but you haven't saved up that money yet. So they're actually waiving that minimum contribution now, and they can all be gift or grants or down payment assistance programs. So that's a really cool feature as well that kind of goes hand in hand with this 5%.
And I would say the buoying measure of this, and this in large part could actually be a lot of the reason why they're willing to start to loosen up on maybe one end of the scale, because on the other end of the scale, we're looking at increased rates, right? As a matter of fact, every month we aggregate the four big guys, right? The four horsemen, Fanny Mae, Freddie Mac, and then you got the MBA, the mortgage guys, and then you got NAR, the realtor guys, right? So quarter one of 2016, expecting everything to be relatively where we're at right now, 4 to 4.25. But then what happens, Jer, when they look and protract all the way to the end of next year?
Yeah, it starts to get pretty high. The end of 2016, some of the predictions, just averaging out the predictions from the big guys, we're looking at almost approaching 5%, 4.8-ish.
Right, which, if you want to get critical about it, is actually where the smart guys in the room said we'd be by the end of this year. They couldn't quite have accounted for some of the things going on globally and economically to kind of keep us down around the 4s. But what do you think? You've been doing this for several different iterations of presidential campaigns and the like. Of course, we've got one coming up here at the end of next year. What do you think the corollary between the elections going to have to these rates?
I'm certainly not an economist, so I need to be careful about this.
But you
just
did stay at a Holiday Inn Express last night.
Thank you. On the secret stash.
Giving myself a point for that.
If your other guests aren't getting that, it's super cool. People kind of hang out. There's a little bit of projection, there's a little bit of prediction, but for the most part, everybody kind of hangs back and waits to see what happens. So sometimes, leading up to an election, what you can see is almost a retraction or just a kind of a mellowing out or a lack of movement, at least a muddled effect, in my experience.
Yeah.
Yeah.
Muddling. Could be great at a bar on Saturday night with a craft cocktail. Not so good when you're talking about finances and real estate.
Right.
Or
stability. I mean, that could provide you the opportunity to do what you need to do in between now and then.
Well, you mentioned stability. I mean, this is something more, I think, that might be a referendum on our side over here on the realtor side. There was a stat that was released this last month that said that 23% of homeowners are considering selling their home, but haven't put it on the market for sale. Now, I was actually encouraged when I saw that. I was like, okay, good. That's starting to go in the right direction, because for the longest time, everybody was staying put. You couldn't get them pried out of their home with a lever for lots of important reasons, but then finally all the money came back and people were still kind of stuck.
Right.
And so this is the one, though, that's sobering for us. So realtor gang out there, you might want to take heed on this next stat. Of that 23%, when repolled again to a follow-up question, over half, 55%, said that they would be more likely to put their homes on the market if given more information about the process. Man, is that sobering.
That's 12% of homeowners polled.
Right.
That's a big number of people that are out there who would probably move if they had a little bit more information about the process.
And what's interesting about that is I think most agents tell themselves that the information is about the market.
Mm-hmm.
That people want to know about the market, that they're not getting any information about the market. So you see, just sold, just listing postcards riddling and littering our mailboxes. That's what's going to make them move. Well, gang, not necessarily true. What they need more is nourishment about exactly what's going to happen, how it's going to go down. Can they find themselves in that process? What are the intended and unintended consequences of me doing this, that, or the other option I've got available to me? And then, oh, yes, it all has to cook in to the financial pecuniary angle, but it's more about the process than the numbers.
Yeah. And let me share something, Jesse, that you already know, but we'll say it out loud here for the folks listening. We have two things that we do for people in this position. One, if you're on the buyer's side, so if you want to sell and buy, one of the things that we do is we sit down and we put a plan together. We put almost a worst case scenario contingency plan on what if you sold your home and it actually came in a little less than you thought. Yeah. And then what if you wanted to buy? We put that entire plan together so you can visualize and see what it might be like to buy that next home, whether that's up, down, out of town, sideways, whatever you're doing. Sometimes it helps just to have that conversation. And I don't think people know there's a resource out there. So if you find yourself in that position, feel comfortable giving me a call at 858-863-0262. 858-863-0262. That's my direct line. You can leave a message. Let me know that you're thinking about this idea, and I can tell you a little bit about walking you through that. The second thing that we do are our home buyer and home seller courses. We have classes for people. You can come in and learn about this process. And it's what I find every time we do one of these things is that what the people say is, I learned so much today. And that might, in a vacuum, sound a little bit crazy, but what it brings to light for me is that us in the industry, the professionals, when we do this every day, what we don't realize is what people don't know. Yeah. And they're dying for this information. So I love that we can do that for our folks.
And the other thing that I hear attendees say all the time is that they just leave feeling better.
Right.
They maybe didn't even know exactly what it was that got them there. They knew there was some sort of gap they needed filled, but they leave just feeling better, a little more nourished about the process. You want to learn more about Jeremy and his classes he's got set up on a monthly basis right down at Greenhouse Group headquarters. You can go to our website at secretstashradio.com, scroll down a little bit. You can actually click on the link down there to sign up and get your name registered for the next available seat. Gang, coming up. So if you can think of this, the tale of two halves, that was the number one thing that a buyer's got to know right now. The availability of money right now has never gotten better locally for you to put your name on something. Put your name on something, Jer, that actually is to the tune of local prices. So, gang, right after this break, we're going to get you caught up on CBS sports commentary and all that good stuff. And then we're going to reveal the number one seller thing that you got to know right now before you ever talk to an agent. That's Real Talk. That's Secret Stash. We'll be right back.